at least here on the 15-minute chart is we're creating higher highs and higher lows, right? So if we start right here, what do we see? We have a push, right? We basically bottom out. We have a minor zone right in here. We break out, higher high. Now what? Higher low. So what this tells me as an intraday trader is, yeah, we could, I don't use trend lines, but just for visual sake, right? Yeah, we could be going down. That is definitely plausible. However, all right, we also have, I definitely don't like using these, but we have this little triangle, right? I'm halfway joking, making fun of the situation, all right? But when we actually look at it, you know, it's all naked trading and so forth. So what I'm looking for here is a breakout to the upside, all right? If it breaks down, if it plays, it could easily play around in the zone and do absolutely nothing. That is something it could do, all right? So what I'm looking for here is we have that breakout continuation to the upside. Why? Because we have higher highs and higher lows forming. All right. What do we have? We have a low here. Boom. We have this consolidation. We have a higher high forming here. All right. We have a higher low forming here. All right. Very straightforward. So when it comes down to this, this is what I'm looking at from a intraday level. We could definitely do all types of things. We could reject off the zone and do something like this. That is definitely plausible. Where we're looking at the market is we want to react, right? React to the market. The market is telling us what it's doing. So right now is when it comes down to the gold market, this is the pre-NASDAQ, all right? So when we're looking at the, one second. Boom, boom, boom. All right. When we're looking at the overall market, that has a whole different story, right? Because it depends on what type of trader you are or trading you're doing, right? So here we have a key level here on the 1 hour, right? The 1 hour structure is going to be a little bit different than the smaller time frame, depending on what you're looking for. All right. And obviously, you have questions, please ask. This isn't, I mean, yeah, it's my show, if you will. But questions are good. All right. Well, Luke, what about this? What about that? What about, you know, anything, a different pair? All right. I can practically analyze anything. But if you do, this is what I trade. I strictly trade gold. You know, I have traded SPX in the past, US 30, GU, UCAD, all that jazz. So right now we're just playing the waiting game, all right? Entry techniques, this is going to be important here, all right? So when it comes down to entry techniques, I have a 2 to 3 entry technique. So when I'm entering on the break. Let's just say the candle closes there, just for example's sake, all right? Somewhere in here. And your zone, let's put a black line here just so it's not competing with the red line. All right, so a candlestick breaks out here. Once the candlestick breaks and closes, follow me here, this is important. This could change the whole game in your trading, just this entry technique. All right, when the candle breaks and closes, right? There's a teaching moment right in that. A candle does not break unless it closes, right? Let's just say this, right? This is not a break. This is actually a complete opposite. This is a rejection. It got smacked, right? It was like, no, sir, no, sirree, right? We're going the opposite way. So that's actually a rejection. So when we come up here, we want a candlestick break and what's this? When I say break, that means a closure, right? Sometimes that doesn't correlate, right? So I just want to make that clear distinction. A wick is not a break. This is not a break. It's a rejection. So we want a closure above the zone. And when it starts to pull back just a little bit, I enter a small position. right? When it starts to pull back and reject off the zone, I do a second entry. And then when we get into a little bit more deep drawdown is my third entry. All right. So what I like to do, and if you see right here, it's a boom right there. We have a structural. Let's do this on the 15. And then when I find my take profits, right, what I'm doing on the take profits is I'm looking for a 1 to 2 minimum, right? 1 to 2 minimum, meaning I'm risking $1 to make two, $100 to make 200, 1,000 to make two, et cetera, et cetera, et cetera, right? So it is Monday. It is a weird, wonky week. So it could just play around in the zone. It could definitely do that. It could drop here and go to the downside. It could do a lot of things. So that's why we're playing the waiting game, which is why trading sometimes is a little boring. You know, it's awesome during sometimes the trade, right? But at the same time, the overall market is going to do what it's going to do. You know, so I saw a couple questions there. Do you trade with the overall trend? To answer that, just to get your definition of overall trend, it's a fairly vague, right? I don't know if you meaning overall trend as in like the day or the week, all right? That could be overall trend. That could be the weekly. That could be the 4-hour. So you want to give me a time frame, I can better answer that question. And then what time frame is needed to be marked up? So Ada Marie, I'm on the 15 through the 5. All right, 15 through the 5. I go to the 15 to see where market structure is flowing. As we see here, we're creating higher highs, higher lows on the intraday level. I'm not looking back weeks and months. I'm looking back for the past, 12 hours or so. And then I go here to the 5 and the 10 to mark up my charts. All right, cool, 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 boom. All right. And then the 10-minute just to correlate and match that. Good question. I think I saw one more. Boom, boom, boom. How much risk are you taking for these trades? Great question, Danny. So I'm not a financial advisor. I don't recommend, suggest, advise anything when it comes down to trading. I am purely giving you educational ideas. All right. So I say that as a personal disclaimer, right? That this is not financial advice, purely education for you to take your own cognitive decision-making skills upon yourself. What I do, I've said that for years, almost like I create a commercial with that disclaimer. So what I do, once again, not recommending, suggesting, or advising, but what I do is I risk anywhere from 1 to 3%. And that basis is on if I'm up for the month, right? So if I'm already up 10, 15% for the month, I'm not risking what I already made, right? I'm already 10% for the month. That is phenomenal. If you could do 10% a month for 12 months a year, for 5, 10, 20 years, you will be the richest person in the world, period. Well, as long as you're starting with like 10 grand, all right? That is 120% a year, not compounded. That is better than Warren Buffett, Ray Dalio. That's maybe not Nvidia because that's a newer stock, but put that in perspective, do the compound effect in 10, 20, 30 years. That is crazy good. That's crazy good. So when it comes down to flipping accounts, and you have the intention of doing so and all of that, it's a whole different story, different strategy and all of that. I'm talking about just quote unquote normal trading, right? We're not doing a flipping account challenge. We're not, hey, we're going to, going into it risking 20 to make 40. If I blow the account, I blow the account. I'm talking about real, raw, live trading, all right? There's a time and a place for that. But when it comes down to really trading, and, when I say really, that's what I'm talking about, right? So I would encourage you not to risk more than 3%, right? You're risking 3 to make 6. And I only say 3 if you're already successful. You've already pulled out multiple 5 figures out of the market, right? You have a $20, $50, $100,000 live account, not prop firm, live account, right? I'm not even getting on my prop firm saga, but so I'm really hitting the psychology here. One, because we're just waiting on gold. But two, this is the most important part of trading. It's not the candlesticks. It's not the strategy. It's not the rules, the confirmations. It's the mindset behind it. If you cannot train your mind, you will not be successful in Forex, period. All right. So when it comes down to your question, I just really want to expand on that a lot because that is the most important thing. If you were beginner, you haven't made 10,000 plus out of the market, right? You have not successfully compounded your account for 90 days. I would be risking 1-2%, all right, somewhere in there. And that's all education, all right. When you say intraday, how long are you in the trade? Jazz, I'm in the trade for anywhere from 15 minutes to maybe an hour or two, sometimes less, sometimes more, just depends on the setup, but it's pretty bang, bang in and out and so forth. We're not on the charts for days or anything like that. Yes, I'm on the 5 through the 15, Pallavi. What time do you like to trade? Now. All right, so basically 8:30 to 10, give or take, is when I'm looking for my setups. All right. So gold just chilling right here. Like I said, I mean, this week is kind of whatever. But this is what we're looking for. And I'll put this in the chat as well. So you guys have it before I definitely hop off. So getting a little bit more into the entry technique. All right, so I'm going to draw this here. So entry technique is 1. All right, 1 is going to be looking for the break and pullback. And that pullback doesn't have to retest, right? This first entry is going to be called a scout position. A scout meaning we are willing to sacrifice it because sometimes gold breaks out, does a little bit of and then takes off. You're like, dang, I missed my entry. What am I going to do? Well, at least I call it feeding your greed, right? You have that itch finger. I got to pull the trigger. I got to trade, all right? So when it comes down to that, that's what we're looking for. 2 is the retest, and 3 is anywhere off that zone 5 to 7 pips, right? In DD. What I've noticed, all right, sometimes I have those perfect entries, and I'll give myself credit, but almost every setup, I'm at least 5 to 7 pips in drawdown. All right, and on gold, I mean, that is nothing, right? From right here to there. All right. This whole zone right here, 77, 87, this zone is 100 pips right here. That doesn't look like anything on the 5. Gold is does a lot, right? She moves a lot. So when you're talking about 5 to 7, I mean, that's 10, 13 pips right there. That's nothing, right? So what I've learned is I always put my bigger entry, all right, 5 to 7, right, 5 to 10, give or take pips and drawdown to get a better entry, right? And sometimes that's just a wick, and that's like, oh, Luke, you got a beautiful entry. What was your technique with that? Well, whatever one of my first entries is, right, my middle entry, I just put it 5, 10 pips below. Oh, that's it? Yeah, that's it, right? And this is 8 years of trading, teaching, experience, whatever. I've always seen in my personal trading at least go 5 to 7, 5 to 10 pips and drawdown. So it would look something like this. All right, give or take. All right, your first entry is like there, let's just say. All right, and so it breaks, candlestick breaks, it pulls back a little bit, and then we go something like this. All right, so that entry is 89.5. So maybe here is 88.7, give or take. put this at a 1 to 2. And then maybe this one's down here. I just want to show you the example of this. So where's the 1 to 2 right there? So boom. So this uglier entry is a 1 to 2. This one's 1 to 2.6. This one's a 1 to 4.3. Right, and that might be a 3, 1 to 3, or 4 flat. Let's just say 4 flat, a couple pips below. Right, so you have the uglier entry at a 1 to 2, right? And this is important. So this asks part A, the 3-entry technique. Part B, hopefully you're taking notes. Right? Yeah, I want to, this is for you. I know this stuff, right? This is for you. Please take notes because this will change your whole game, right? So right here, you're trading one lot, 1.0. All right. Here you're doing, let's say, 0.2 of one lot. Here you're doing 0.2 of one lot. And here you're doing 0.6. So you're stacking a bigger position, not meaning you're risking more in the sense of you're over leveraging, right? So maybe let's put it like literal. You're risking 3% total. 0.5 here, 0.5 here. What is that? 1%. Then you're risking 2 here. So if this does lose, right, you're getting if you does lose, right, you're still risking the normal amount. But when you win this, you're risking a half to make 1, right, 1 to 2. Risking a 0.5% to make 1%. That's a 1 to 2 risk reward. You're risking a 0.5% here, right, which would be making 2.6. So you're making 1.5, let's just say, right? And then here, right, you're risking 2% to equal that whole pie of 3%. But in this case, you're risking 2 to make what? 7%. So in this one trade, you're risking a half, and 2, right? So the half, say it does win, right? You risk a 0.5% to make 2%. Or sorry, 0.5% to make 1. So you win 1% here. Nothing crazy. Right? You risk a 0.5% to make 1.5. Now you're up 1.5 plus 1.5. Now you're up 2%, 2.5% between these smaller positions. Nothing crazy. But then here, you're risking 2, right? This is a 1 to 3.8. Let's just, for math, let's just make it simple. 1 to 4, right? Which is like a pip below. All right, now you're risking 2 to make what? 8. So you made 8% here. You made 1.5, which is 9.5, and then a flat 1 here, which is 10.5. See what I'm saying? So you made 10.5% in this setup, risking 3. See what I'm saying? You risked, one more time, you risked a total, right? A total of 3%, and you made 10.5. Add some spread, add a crappy entry, you made 9%. This is a 1 to 3 overall. See what I'm saying? And overall, you're still going for that 1 to 2, right? You just have a deeper entry, right? Does this make sense? Question, boom, boom, boom. So if gold breaks below, you would change the sell setup. Not really, because I'm looking to trade with trend. All right. So if I do go against, let me clarify that answer, Blessed. If I do go against trend, I'm going for one smaller moves and protecting my my stop loss and break even and so forth. I want to trade with trend. I want to see, okay, cool. We're creating higher highs and higher lows. So that's why it's important. Yeah, I call it trend, but it's really like broken down to higher highs and higher lows. So right here, boom, we have consolidation. We break up here to the higher high. We create a higher low. We created an equal high. We created equal low. So for me, I don't use trend lines, but just for visual sake, if it helps you, use it, whatever. We're going up on the intraday level. Yeah, I can make a case here, like, well, Luke, we have this zone right here. What about if we go to the the downside? Yeah, that is plausible too, right? So that's why we have to wait for the market to tell us what she's doing. All right, we have what, 15 minutes till this candle closes. All right. This could easily, be going to the downside. We don't have too crazy market structure here. But it could, right? Could do a lot of things. I look here on the 4-hour, right? We're just kind of going up. Right. So that's why I don't get too caught up in the 4-hour, the daily, because I don't really care what it's doing in 6 hours. You know what I mean? I'm in, I'm out, I'm done with the day. This is a whole different psychology of trading where if you're looking for the overall move, and as in trying to catch 200, 300, 400 pips, that's a different analysis. All right. But if we're here on like, what can we make here and now today without obviously getting greedy, then that's a different conversation. Boom, boom, boom. I normally mark them on the 1 hour and trade on the 5. I mean, you can do that, Pallavi. The thing is, if you're going from the 1 hour to the 5 minutes, a drastic change. If you're looking at the 1 hour zone, you're probably getting a lot of fake outs, right? The stronger the zone, or stronger the time frame, the stronger the zone, stronger the trend, the candlestick pattern, whatever it is stronger. I love your golden arrow strategy, one of my favorite. Appreciate you. Can you explain, put your stop loss? Yeah, so I'm looking for where the impulse, and this is a generic stop loss, right? Because I don't know where price is doing yet. So let's go to last week. So this is going to take a second to play out, possibly go over on time, which is fine. Boom, 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 boom. Where are we at? All right, so this is a pretty good. I'll just do a past couple of days. I don't really trade Friday, so I don't really want to use an example off of Friday. Thursday, there was no movement at all. If you see this, it just goes sideways, right? So right here at 8:30, right? There's no higher highs and higher lows. We just have a zone up here, zone down here. This is all consolidation. So Wednesday was actually a really good move. If I can find it. All right, here we go. So this is what we're looking for in a perfect world. All right, so 8:25 to 8:30, that's the 8:25 candle. It goes to 8:30. There's no consolidation, right? So I'm sitting on my hands. There's absolutely nothing, right? My trading plan starts at 8:30 because that's the opening, the pre-opening, all that. And then what I start to see here is like, all right, still no consolidation. What do I do see here? Higher high, higher low. Higher high, call that a higher low. Higher high, what are we forming? Higher low. Okay, cool. All right, maybe. Okay, now we got a double top. Now we got a double bottom forming. Okay, now we're talking. Now we're talking. All right, we got what? It's 9 o'clock. Sometimes that's what happens. I don't control the market. All right, 9 o'clock happens, right? Because this trading is really like 8:30 to 9:30. Right, this move. All right, boom. All right, let's look at the 3. Oh, it's way high. Boom. We're not entered yet. This candle is, I think it's closed at this point. All right. Tidy up my zones. All right. So boom, zoom out so you can see. All right. So this is a rejection candle. Oh. This is a breakout candle right here. This longer candle right there. This is a rejection candle. So in this example, I don't know, trading view like got stuck or something. All right. So I would be entering maybe like right here, give or take. Right. And then I see it reject off of here. So I'm going to put my my stop, maybe my stop loss right below that candle. See it right there at 76. So that's, let's go to, it's 2 pips below. Let's go to like right here. All right. Give it a little room to breathe. Oh. And so maybe my first entry is right there. All right. And then I get a deeper entry Oh, it's moving the whole thing. Deeper entry, maybe somewhere in here. Boom, right? So give or take. All right, this is where the power of stacking entries comes into play. And boom, your first take profit. Shimmy this up a little bit. And maybe you only got one entry here. You know, that's fine. It's just, you know, don't be greedy as well. Right? There's going to be moves like this over and over and over and over. And if you want to put your stop loss to break even and let it ride, more power to you. Hold it for however long you see fit. I'm not a holder when it comes down to Forex. I'm going to grab the bag. I always use this analogy. It's kind of funny, but I always put this little disclaimer here is it's like which I would never, if you're going to rob the bank, right? If you were going to rob the bank, right, what would you do, right? My psychology, I'm paying attention here, don't worry. My psychology would be I would want to run in, grab what I can carry, and run out. It's Tuesday. I am not the person that wants to take every little thing with them. All right. Here we go. Boom. 825. 830. All right. So this is an example possibly like today. All right. So what do we have? We have the higher low. We have the higher high. All right. Boom. All right. Something like that. So as price is coming down, I see this. I see this. All right. So are we going to go up? I don't know. Maybe. All right. We're waiting. We're waiting. 910. Boom. Our break. So then we're waiting for what? The retest or stacking our positions. So what I like to do for the question on the stop loss, as long as it doesn't break back in the zone, the trade is valid, right? What you don't want is to get spiked out by a wick, right? So as long as price does not come back in the zone and close, you are fine, all right? A generic stop loss is going to be about 50% of the zone or where the initial push came from, right? So if we go here to the 10-minute, you'll see it'll be a little more clear. All right, so the initial push of the candle was right about there. All right, see where that candle closed? All right, so now we have a retest right there. Boom. Our 1 to 2 is right there. I see the chat. And I'm paying attention to the setup for today as well. All right, so boom, there's our retest. There's our second retest. All right, plays around, boom. So maybe you got in again right there, cool. Maybe a little bit deeper entry up there, just say you did. Oh, that's a Fibonacci. maybe you got in a little sniper even higher. That one's 1 to 2.5. And maybe you got into a smaller one, you know, because you got trigger finger at somewhere in the middle. Maybe I can get that middle. Something like that, give or take. All right, boom. And maybe you got in up there. Who knows, right? Boom, take profit. All right, so this one's a 1 to 2, 1 to 2.5, 1 to 2.2. And maybe just for example's sake, all right, maybe you got in up there at 1 to 4. Cool, all right? Beautiful. All day. All right, I don't care. This is irrelevant, right? Hit stop, take profit, take profit, take profit. All right, so this is counter trend. We're trending up. So getting into today, that's, you know, we don't want to get caught in that. But we don't want to get trigger happy. We want to honor that zone. And this is going to take a few calls, weeks to learn. This is a skill set. You have to actually put in the work to learn. This is not going to happen over and, oh, Luke, I hopped on one session, I'm good to go. I wish it was like that. You're gonna have to hop on these sessions over and over and over and over, right? Get in the education over and over and over, right? Trade with a good broker over and over and over, right? There's Fugazi that some brokers do. So I explained the stop loss. Cool, cool, cool. Since I normally mark up 1 hour. Yeah, so I answered that. Yeah, if you're on the 1 hour, I mean, I wouldn't go to the 5. I mean, you can do whatever you want, but I have a 1 hour strategy. The most I go down is the 15, right? So if I'm on the 4 hour, I go the 2 hour, the 1 hour for entries. If I'm on the maybe 30, if I'm on the 1 hour structure, I'm going to the 30 and the 15. If I'm on the 15-minute structure, I'm going to the 5 and the 3. Obviously, you have the 10-minute here too, but those are my sweet spots. And it's just preference, right? So if it closes back in the zone, close the trade out. Alonzo, yeah, so that's what I do because I like to cut my trade short. In the sense of not, there's a high probability it's going to continue to go that. It's called a fake out candle, right? It's actually technically my bank high strategy, right? Where a candle closes out and then the next candle comes back in. It's not a retest. The bad boy comes all the way back in. All right. So therefore, on my style of trade, that would be my bank highest reversal strategy. Right. Then here on like I said, on gold, this has a high probability. I want to say high, but it has a probability of just continuing to go down here. If we look here on the 1 hour, we have a break continuation. But like I said, I'm not looking for the overall move. I'm looking for that bang, bang, bang move. And we have a big liquidity, not big, but for the 5-minute big right here. Right, because we have the high all through here, and we're just kind of it's a zone, right? And if it was to go to the downside, we're doing the exact same thing though. All right, entry technique, boom, zone to zone. You have a liquidity down here. The 2 hour close as well. Yes. So we're just kind of caught in this little structurally sound area. Questions? Bobby's gonna be hopping on here in a few with his NAS 100. I was out of commission last week. I was in Guatemala, so I didn't trade really at all. Every year around this time, I take a little bit off to replug, reassess, re-energize for 2020 or the next year. Do you close? All right, answer that. Do I sell? I mean, if the market does what I went over, then we would sell, yes. All right, we're playing the waiting game right now. Depending on the market, could be like this all week, could be very explosive. So I'm gonna put this in the chat so you guys have it. The entry techniques are huge. All right, so please follow that. Boom, boom, boom. Could you say those time frames again? Yes. So if I'm on the 4 hour market structure, I'm looking for my entries on the 30, primarily 1 hour and 2 hour. If I'm on the 1 hour structure, I'm primarily on the 15 and 30-minute entries. If I'm on the 15-minute, hence what we're here, right? I'm looking for the 5 minutes and I do a little 3-minute, but the 5-minute, 10-minute, right? So this is based off price action, market structure, higher highs, higher lows, naked Forex, right? I know Bobby is more of a smart money trader, but that actually goes very in line with my bank high strategy. When we were doing the sessions the other week. Oh, wow. That came out of nowhere. Um, news. And then also, this is not a political call at all, but keep in mind there's some crazy things happening overseas when it comes down to wars, right? So that plays a huge role on the fundamental news. US dollar, US yields falls on bets. Okay, that's probably why. Sure. So if you look at Bloomberg, dollar US yields fall on bets. So that, I mean, falls is a very negative word when it comes down to the dollar. So whatever is going against the dollar, obviously would do opposite. Trump May muddles inflation, blah, blah, blah. Macy's delay earnings after employee millions expenses. It's like fraud, fraud, fraud. Macy's says employees intentionally made erroneous entries to hide about 132 million to 154 million of expenses. That's not good. City bonuses by time. Yeah, so there's gonna be a lot of things coming out shortly, next few weeks, et cetera, et cetera. Gold's just doing nothing. I'll go over a little bit of Bitcoin here as we're waiting on gold. We're almost at that 100K mark. That is a huge psychological, like, when, not really if, I mean, when this breaks, it's a huge, it's like 100K, it's like a milestone, right? Think of it like from that perspective. When that breaks, it has a huge opportunity to continue to skyrocket a lot, a lot, a lot. Solana, XRP, yeah, XRP been in that bag. I don't know what XRP has been at. It was at $1.50 to hit $1.60. And $1.62. And I got in right before. I mean, I've been in many times, but got in right before the collapse, not the collapse, but they went under investigation by the SEC. Now that got removed. Now, remember, this is not financial advice. I don't recommend suggest anything, but I would really consider holding this at least till all-time highs, wherever we were, way up here. Not that one. Let's do this one down here. All right, so 330, I think. Yeah, 33, 20, whatever. All right, we'll just say 330, 29. I mean, the reason it didn't, like, why Solana and all these other cryptos at all-time highs, you had the chair Fed or SEC, sorry. I'm having a brain fart, forget his name. Hessler, I don't know. Someone will probably put in the chat. And being removed, and he's very anti-crypto. Now, Trump, and it's not political, but just the new administration, I'll say that, is very pro-crypto, right? So it's very good for I mean, it's good for all. Solana, I mean, you could have got in here in 2023 at $8, $18. Now it's at all-time highs. Yeah, by a little bit. All right, what's gold doing? All right, we're at the hour. All right, so we're possibly breaking here. Posible. Any last question? Gary Kenzer, there we go. All right, so we need that clear break. All right, clear break for that to be a good move. So what we don't want is just to reject and go back up, right? It's contradiction to what we want. Any last questions? I know we got Bobby coming on here in about 20 minutes. Of course, of course. Will you ever send the ideas for gold on the Telegram chat? You have it right here, Mo. It's in the chat. The setup is actually in the chat. How do I mark my zone? So what I'm doing on my zone, I mean, it doesn't even matter what time frame. What I'm doing on my zone is I'm looking for a multiple touches, right? I probably couldn't go over this tomorrow. But I'm looking for multiple touches on a certain time frame, right? So for me, I want that 1, 2, 3 touch. So you're looking for double bottoms and double tops, more or less. That's this candle. This is where your 3 entry technique comes in. All right, give or take. Like I said, if you're on FX Live, right, you'll get the same pricing and all that. So just make sure you're using the right broker, FX Live as well. Boom, boom, boom. Price is coming back up to retest. And just please don't use, or please use risk management. This is a choppy week. You're 1 to 2. Right about, come on. There. Right, you have a fair value gap forming as well, which is beautiful. Any last questions? In a perfect world, right? I'll draw this for you guys so you can see, right? In a perfect world, we have market structure. Boom, boom, boom. We broke out. We come back here. The key in the perfect setup, oh, that's ugly, is right here is we have a rejection candle. So if we look at wherever we're at, last Wednesday, we do multiple days. Right here. This candle broke out. Maybe. This candle broke out. This candle retested. This candle reject. So breakout, follow me here. 1 breakout, 2 rejection, 3, wow. 1 breakout, candle broke out, closed. Candle 2 retested. Candle 3 rejected. Right? So breakout, retest, rejection. Breakout, retest, rejection. Breakout, retest, rejection. That is the perfect setup. All right. That is exactly where we're at, what we're looking for. All right. And sometimes it just does this where it's like boom, and it could come back up. So just be patient. All that good stuff. You have a small entry right here, right? So break out that itty bitty pullback to that zone. Maybe you put a sell limit right here. Maybe a sell limit here. At least you got it in the bag on the small itty bitty pullback, right? The 3 entry, and that feeds your greed. That feeds your greed. Same time every day, I assume. Yes. Same time, same pair, same setup. Debbie, I'm doing the 3 entry technique that I shared, right? 1 on a break, slight pullback. So that would be your first entry. You'd be in this trade now. All right. There's your 1 to 2. And your second entry, and it could just drop, right? Your second entry is right on the zone, hopefully a rejection candle like I just showed you. Like, wait, what? Like, that has to be a better risk reward if we get a better entry. The stop loss is way higher. All right, so shimmy that up. And then maybe it does reverse here, getting some drawdown. Maybe something like that. And once again, sometimes she just does her thing and she just doesn't retest, and you get this move and call it a day. This is the feed the greed, right? Copyright that. And this is a great time if you're happy with where you're. Oh shit, shoot. If you're happy with where you're at, you're at a 1 to 1. Do your thing. Remember, this is the week to grab your bag and run. This is not the week to be advantageous and try new things and all that. This is a choppy week, ugly week. All right. 1 to 1.3. What point do you put stops to break even? That's completely up to you. The answer I'll give you is what I do is it depends. That answer depends on the day of or where I'm at for the month. If I'm up, like this is a 1 to 1.5. If I'm up 5-10% for the month right now, I'm probably closing this trade. Oh, let's fucking go. Freaking go. All right. Come on, talk to me, baby. Get them legs going. Boom, 1 to 2 is achieved. Let's go. I call that 1 to 2. I mean, we're like a micro pip away, right? Boom. Let's go. We Gucci 3000. All right. Any last questions for today? Beautiful, 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 beautiful. Come on, baby. Any last questions? Was this recorded? I believe so. And remember, this is all education. I'm not suggesting, advising, recommend anything. I'm not a financial advisor. I don't have a certification of any sort except an MBA, massive bank account. Just kidding. Wink, wink. I'm just being funny here. Remember, this is to take your own cognitive decision. Wink, wink. Read between the lines there. All right. This is not financial advice. This is purely education. All that jazz. All right. So I just want to put my disclaimer out there. All that. Last question, going once, going twice. You have Bobby here in 15 minutes. The Tradeathon continues for the week. And then I think you got Asian and London session. Kenvry, absolutely amazing trader. If you have not tapped in with him, absolute animal on the charts. Obviously, you've probably got connected with Bobby. I mean, he's a smart money man, absolutely crushing the charts, getting those 1 to 6, 1 to 7s on the 1, 3, 5 minute. Like I said, Ken Vree's absolutely crushing it, has a resume super, super long of impacting hundreds and thousands and tens of thousands of people around the world. And I believe we got Gary as well. You literally master gold. How high is your win rate, Luke? I mean, the win rate correlates. Don't get caught up in the win rate, because for me, it's all about risk reward and win rate balance, right? We're at take profit again. So a generic rule is you want to go 1 to 2 minimum, right? And if you can do 60-70% minimum, you're actually really, really doing good. Don't get caught up in the stats. As long as you're profitable, to be honest, that's all that matters. I say this very lightly, and I wouldn't suggest this, but if you're even a 1 to 1 risk reward and you're super accurate, 80, 90%, guess what? You're profitable, right? I would never recommend going negative risk reward, but if you're profitable, that's really all that matters, right? That's all that freaking matters. There's no right or wrong way to trade, right? They're going left, going right, right? If it gets to the destination, it gets to the destination. If you're profitable, keep doing it. I talk about all the time. I'm a naked trader. I don't use trend lines. I don't use Bollinger Bands. I don't use Fibonacci. If it works, do it. RSI divergence. If it works, do it. See what I'm saying? How do you control your emotions while in the trade? That's about 6 months of these sessions. The answer to that iPhone is a lot of time and a lot of chart work and a lot of experience. And when I say a lot, I'm talking about 6 months plus. So, alrighty, guys. Well, you got Kendry later today. You got Bobby here in 15. The Tradeathon continue, guys. I love y'all. I appreciate you guys all. I will see you guys tomorrow. Ignore my hair. I'm out here in Puerto Rico. It's a little hot right now. I'm going off to the gym. So I love you guys all. I appreciate y'all. See you guys on the next call. Same time, same place, same pair, same setup. New bag. Let's go. Love y'all. Peace.